Welcome to our short video explaining the total tax contribution that businesses make in the UK. I'm Rhiannon Jones, a Principal Policy Advisor in the CBI's Tax and Fiscal team, and I'm going to talk to you about the results from the 2016-17 tax year. The UK collected £674 billion in taxes last year. Of this total tax collected, business contributed over 30%, some £205 billion in taxes. Businesses pay a number of different taxes, as highlighted in the pie chart on the right. Corporation tax is probably the best known tax that businesses pay, but it's not the only one. Businesses also pay employers' national insurance contributions, business rates, fuel duties, and other taxes like stamp duties, capital gains tax, insurance premium tax, to name a few. The contribution of each of these is highlighted in the pie chart. In 2016-17, the total business tax contribution increased by £19 billion to £205 billion. The proportion of growth in the business tax contribution has even outpaced the increase in overall tax revenue. As a result, the business share of total tax revenue has increased from last year from 29.6% to over 30%, the highest proportion this decade. The bar chart highlights the growth in tax from the previous year. In terms of what's driving this growth, there are a number of factors. For example, on corporation tax, UK corporation tax receipts grew by 21.9% to a record high during 2016-17. The depreciation in the value of the pound supported profit growth by increasing the value of overseas earnings and allowing a profit margin expansion for exporters. A competitive corporate tax rate can support private sector growth, which in turn generates sustainable growth in the business tax contributions across the piece. We've also seen an increase in employers' national insurance contributions. In 2016-17, tax revenue from employers' national insurance contributions, which is the biggest business tax, increased by 10.1% to £72.7 billion. The growth in this tax was supported by higher levels of employment and changes to national insurance contributions policy in relation to final salary pension schemes. The UK has the lowest corporation tax rate in the G20. It's currently 19% and set to reduce to 17% in 2020. However, during the period in which this data relates, the rate was 20%. When you compare the UK's corporation tax receipts in relation to GDP, the UK's corporation tax revenue as a proportion of GDP is the third highest out of G7 countries. What this means is, adjusted for economic size, UK businesses contribute more through corporation tax than counterparts in Germany, France, the United States, or Italy for that matter. As we head into the general election, firms will be looking for reassurance and certainty from all of the political parties on tax policy. Whoever the next government, they must prioritise stability in the tax system for the short term and work with business to create a modern tax system that reflects the economy over the longer term. That's it for now, so thank you for listening. If you have any comments, you can contact me via email or on Twitter.